What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers listed up above. We'll of course check in on our broad market. We have our core list of companies, and this week I've got 5 trade ideas to share with you towards the end of the video, so definitely stay tuned for that. Some of these ideas came from Discord members, notably AFLAC here at the bottom of the list. Great find. If you want to chat with myself and other traders in real time, check out the links in the description. The Discord is there, and it's completely free to join. Without further ado, let's jump right into the charts. So kicking things off on our SPY weekly chart, talking about candle structure and location as we always do. For structure, certainly a bullish candle. Solid green body to the upside, little bit of an upper wick, not really a concern. Typically when you move into blue sky territories, uncharted waters, you get a little bit of buy and sell, a little bit of, basically people hesitant to commit volume up here. However, overwhelmingly, if we talk about the lower wick and the location here, those kind of tie hand in hand, where was the prior week's high? All of the activity from this week was basically above the prior week's range, so breakaway value to the upside over the course of the week. If we think about the psychology of the lower wick as well, that would indicate that we technically dipped our toe into the prior week's range. We did not attract a stronger seller, and instead we found buyers who took us higher to obviously close at these new all-time highs. So from a structural standpoint, certainly a bullish chart. From a location standpoint, certainly a bullish chart. If we check in on volume down below, it's on par with what we've seen throughout this rally, so I would argue that is also a feather in the cap for the bulls. If it was going to be more bearish, we would have seen much lower volume, basically indicating that people were not willing to transact up here and, they were not willing to commit volume. That wasn't the case. Obviously, people were fine with it. A little bit of that upper wick, as we mentioned, but that's typical as you move into blue sky territories. The flip side of this same coin, though, is if we scrunch up the chart and draw in this support trend line, this should not come as a surprise to anyone. We've been watching this for quite some time. But if we redraw this as a channel, do something like this, this is the resistance trend line, which we talked about in last week's episode. Where did we park ourselves on Friday afternoon? Right at that resistance trend line. So why do I bring this up? What's the point? A couple of things. Number one would be that this is not a blind short here just because we're making all-time highs, just because the market feels, quote unquote, feels overextended, or just because we're at the resistance trend line. It is not a blind short because of that. I think the more realistic thing to do is to start managing our expectations. Instead of looking at this, right, basically coming off the lows, straight shot up to the top of the channel with zero pullback, instead of looking for that trajectory to continue, I think we can look back into history and sort of see what happens as we grind up against that resistance trend line. Manage the expectations, be willing to look for a little bit more two-sided trade, back and forth activity, and not just a straight shot to the upside. Again, the market can always do whatever it wants to do, but I don't think that the appropriate course of action is preparing for that, or the flip side, preparing for something like that. You don't want to push your luck as we're coming into these junctions. Instead, wait to see if this ultimately is the type of activity that we do get here at the resistance trend line. Let's drill down to the daily now and actually talk about tradable levels and make this concrete, right? It's very easy to say manage expectations, so on and so forth, but what are we actually going to do about it, right? Well, noting where we are, we're through the, broken trend line. That one was broken here, remember that. We're through that, we've closed above, and now we're sitting right below the main resistance trend line. So again, anchor, touch number 1 and 2 now right in here. Same thing applies for what we just discussed from the weekly perspective. Can the market pull back? Absolutely. Can the market go higher? Absolutely. An indecision candle from Friday's session. What I think is at least important, or maybe worth noting, we're not going to read into it as an end-all be-all, but notice that on Friday's session we have energy at the top of the list as well as utilities here kind of leading the charge to the upside. That's typically not what you want to see as you're making new all-time highs. You want to see those heavier weighted sectors, the XLK, XLF, and XLV at the top of the list. Again, one data point here. Maybe some people are repositioning for a bit of a corrective move here, but you're not going to read into it too much. At the end of the day, the S&P chart is the driver. As we discussed from the weekly, it is looking more bullish than bearish, but we need to be cautious here at this resistance trend line. In terms of downside levels to pay attention to, what do we have? Basically nothing in terms of pullback from this entire week's trade. So I think the most important thing, or most useful thing rather, we could do would be to look at the market profile software. This is going to be really telling. If you're not familiar with this software, check out this video. Top right hand corner is going to tell you what it's all about. how you can use it, and some of the terms I'm about to be speaking about. So Friday's session, most important thing to note here, had a mechanical high from Thursday, and then here, when we filled the gap, put in a poor low. What that would indicate to me, at least, is that very nuanced long traders, people looking for upside, bought this, and the people who are looking for the gap to fill to the downside, got out of their short positions at this very nuanced level. So again, short-term traders in control, and they look like they want to be more bullish than bearish, buying the gap fill and selling or essentially getting out of shorts at the gap fill area as well. What you'll notice from Friday's activity is that the majority of the time and volume was spent above, right? There was really a lack of volume down here when that big sell actually did come about midday. That's the first thing to note. The second thing to note is that if there's any further pullback, and another piece of evidence why there's no stronger seller, we'll get to that in a second. This is essentially Wednesday's session from the FOMC meeting. You can clearly see we have an area of single prints here, an area of single prints here. That's going to indicate that, again, we have very emotional short-term buyers in the marketplace saying, get me in, get me in, get me in. It obviously led to the move higher. But what we can take away from this is targets to the downside if, again, big if here, there is going to be a development to the downside. Your targets would simply be these areas of single prints. The low liquidity there makes them prime suspects for either turning at the top or moving through them, turning at the bottom. And the same thing holds true for this little section down below. If the move really is lower, either a turn right at the top or a turn right at the bottom. You expect these to act as gaps essentially in your chart. Hopefully that was clear. We'll look at that on the ES futures on Thinkorswim in just a second. But the third reason why I really don't see a stronger seller in this marketplace is because we treat these as different distributions. Here's number one. Here would be number two, where there's that JK overlap. And here is number three, where the majority of the day was spent before the 2 p.m. announcement. What happened on Thursday, right? If we draw a line at the high of day from Wednesday, all of the rest of the week was spent above the Wednesday session. I would even have made the argument that it was neutral to bullish if we came in and started spending more time in the upper distribution. But this is like ultra bullish in the sense that we never even came in, never found any price acceptance within. It was just a move immediately to the upside. Again, if a stronger seller was here, they would have seen this rally, seen that these are weak-handed players. If they were to push it lower, it should have come back down into the point of control in section number 3 here, but it did not happen. So all of these things would lead me to believe that the market still is bullish. We've talked about all of these things, and those are the downside targets which we've identified from that Wednesday session. Remember, you cannot see this from a daily chart on the SPY, so hopefully that was useful. Here it is in terms of, ES levels, okay? We're basically looking at 46.42 as the top of the first singles. Underneath that, we have 46.32 as filling it. So remember, if there is going to be a strong sell-off, if a liquidation break occurs, you're looking for either a bounce off the top. If we start getting acceptance inside, look for that to fill all the way to the bottom, then maybe a bounce. The same holds true for this section down below, just to give you those numbers, 46.25 down to about 46.20. Hopefully this was really useful in understanding the S&P this week and getting into that market profile. Let's do the same thing for the QQQ, but speed it up a little bit here. Let's go out to the weekly. You can certainly see our resistance trendline anchor, touch number 1, 2, maybe 3 in here as well, basically closing at and above it from Friday's session at that 400 round number. Let's go back down to the daily. The same sort of sentiment is going to apply about not being a short here at the all-time highs just for the sake of shorting all-time highs, but also managing expectations to the upside. Maybe instead of looking at a straight shot here, we get more two-sided activity, which looks something like this, okay? That's the equivalent. In terms of levels to pay attention to here, same thing holds true. What I've done essentially, because this is not transferable, okay? If we come on over to the NQ, which is going to represent your NASDAQ futures, what you'll notice is that the numbers are not an even division of 10 like our ES futures and the SPY, okay? So this does not translate to the Qs, but what I want to do is illustrate the same sort of thing. If we look at the FOMC day, that is going to be this day right here, and the following day, the Thursday, we can treat this entire range, this here, as being a large void of low volume. Look at the volume profile here, very thin in comparison to what you see where there's a lot of price acceptance, which would be up here, right? So all things considered, this is going to act as a massive, big unfilled gap underneath us. Do I say that it's going to fill all in one go? Absolutely not, but it's an area you need to be made aware of, okay? So going back over to the Thinkorswim platform to illustrate this, let's go to like a 30-minute chart, okay? And if I zoom in a little bit, you'll notice that here's all that acceptance underneath. Here's where that big breakout and poor structure is. Basically, you know, very little volume in here in terms of at each level. Obviously, it's increased down below, but that's that big void, okay? That's that void in the chart. In terms of QQQ numbers, it's 395.99, call it 396, down to 389.59. If a stronger sell does emerge from this marketplace, which again, we're not anticipating, but if it does happen, then you're going to look for a move to here. If it breaks, look out below. You can see that all of this poor structure may be retraced. Now, here's another tip for you. What happens if we do something like this and turn at a very random level, maybe the midpoint of that low liquidity range? That would indicate that still a stronger seller did not emerge, right? If you're expecting this to fill and it does not fill and we go higher instead, again, a stronger seller is simply not in this marketplace. Hopefully this was just as useful as what we did with the SPY. Let's wrap it up here with the IWM. We finally have something to talk about in this name. If we do something like this, here's your range. Obviously we've broken out of this, now 10-month range. That is an extraordinary thing. Think about all of the energy that's pent up in this range. Can we see upside continuation? 100%. What do we also know about IWM, right? This is technically a risk on signal for the marketplace. So again, does it make sense why the SPY is not a short here? Because the IWM is also breaking out of this massive range. Hopefully all of these data points are starting to come together to form a picture for you. If we scrunch this up, basically what we would look at on a breakout of a range like this is a doubling of the range. So here's the range as an eyeball. To the upside, it's kind of off screen. Let's go ahead and scrunch that up a fair bit. Try again. So there's your range. If we eyeball that to the upside, we're basically looking at 255, 256 as an upside target. Is it going to get there all in 1 week? I don't know. No one technically knows, but that's basically the area where we would start to look for some sort of resistance overhead. In terms of supports underneath us, we don't have to go to market profile for this one. It's quite simply going to be as long as we remain above the breakout point here at the 234 mark, then things are all good inside of IWM. We could get a break retest and then move up to that 255. We could go just, straight shot up to 255, or we could start putting in a bit of a daily bull flag, something that might look like this, right? And that would be A-okay as well. A break eventually taking us to that 255, but exciting things here in the IWM, finally breaking out of this multi-month range. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. Kicking off our companies with Apple here, pretty lackluster of a week. However, we did resolve that all-important 150 to the upside. On Friday's session, we used it as support, sort of putting in a bit of a hammer candle, so I would be more apt to look for upside here as long as 150 continues to hold. There could potentially be a breakout up and over 153, which takes us into 155 and then all-time highs after that. Note that 155 is a psychological number as well as a couple of wicks from in here, but really I would imagine most people have their eyes on that all-time high. So again, that's why that breakout is kind of going to look like this. Maybe a quick stutter step there, something that looks like that. But overall, nice move up and over 150, holding it for now 1, 2, 3 days worth of trading activity after a very interesting Tuesday, to say the least, right? That upper wick was kind of concerning, but now after 3 days of acceptance above, I suppose we can look at 150 as a solid area of support going forward. To the downside, if it breaks down, however, we're just simply looking at the 50 SMA and 147 to be our saving grace. Note that we do have a uptrend in place. Here's your major low. Next higher low would be here. If we pull back, technically it would be an equal low, which would keep us in more of a neutral trend as opposed to being bullish. But again, 50 SMA holding, in my opinion, is, overall for the grand scheme of the stock, will be more bullish than bearish. That's why 147 is where we'll leave it off for the downside. Let's continue on to Netflix, giving back some of the gains here. However, where are we, right? If I zoom into this, what you'll notice is we're right at the support trend line, right at the prior breakout point. So I would be on the sharp lookout early on to see if we can come maybe a little bit lower, get into that 640 number and start to print intraday reversal patterns. If we get a daily hammer that prints, maybe it could look something like this, maybe it could look like an indecision doji around this area, then start to be on the lookout for the turn. On the turn, the upside target will be at 661.50. After that, we have clear area of resistance and support here at the 676 area, then all-time highs, okay, would be in play at and around 690. So that's the bull case if we get either some sort of, could be a daily hammer, hammer, could be an intraday inverted head and shoulders, could be a double bottom, could be a number of things, but 640.28 coinciding with this support trend line is the area to start paying attention for a potential reversal. On any sort of downside, I wouldn't really place too much emphasis into the 625 anymore. It will probably be all about this 50 SMA and the prior breakout point here, closer to 614, we'll call it. Next up, we're going to take a look at Tesla, and it's worth at least mentioning that Elon Musk put out on Twitter, should he sell 10% of his, shares in Tesla to pay some taxes? That's besides the point, but if he starts to sell some shares, what does that mean for the price? No one technically knows, right? No one knows what happens if Elon Musk sells 10% of his shares. Maybe the market dribbles a little bit lower. It's going to be expected, obviously. We'll see where we open up early on in the week. But ultimately, as I've said before, I've been skeptical about this one ever since the prior all-time high. As it continues higher, I think the only thing to do is really look at intraday levels. Can't really read into it too much from the daily perspective. What you'll notice is we're getting price acceptance, those two daily dojis up here at these all-time highs, instead of dramatically falling back down into prior ranges. If it does break down underneath 1212, looking at 1160, you can clearly see a shelf of support in here. Underneath that kind of opens up the door for a little bit lower, back down towards 1065.43. Do with these levels with what you will with them. However, Tesla, again, I just can't convince myself to be a new long up here after the chart has essentially done what it's done. So please take that with a grain of salt. Those are the levels I would pay attention to. Alibaba, this one is finally breaking down from that head and shoulders, which we discussed in the Discord. I don't remember if I mentioned it in last week's episode, but here's your head and shoulders, right? Here's your neckline, the 50 SMA baked in there as well. Clear violation of that to the downside on Friday's session. So technically looking for further continuation lower into the top of the gap at 150.75. If the gap's going to fill, it's down to about 144.45. Remember that this stock is overall in just an overwhelming downtrend, not uptrend, certainly a downtrend here. So is it realistic to look for more downside? Absolutely. Earnings are a little bit further out on this one, not really a big concern, but BABA looking bearish. If there is a turn to accept back inside of above that neckline, your target's 170. See if we can make an equal high and then potentially reevaluate from there. But as it sits, bearish inside of Alibaba. Facebook is up next. This one's also, it's got me still caught in a crossroads. I was very unclear on direction last week. Same thing's going to hold true here. We had a nice 3-day balance, which resolved to the upside, but big inverted hammer on Friday's session right off the 50 SMA, kind of at this prior resistance as well. Small gap remains underneath us. I would probably just look for day trades here inside of Facebook. There's really no structure I'm seeing from a swing trader's perspective that's attractive. So underneath 340, we'll call it, we're starting to look for that gap to fill down to 337.50. That's a potential trade. Underneath that, look for this at 332.79, the top basically of that 3-day balance where that breakout essentially stemmed from into the 50 SMA. On a hold of the gap, right? If the rest of the broad market's going to be bullish, if everything's going to be bullish here, then we hold on to the gap, and a break of the 50 SMA, doing something like that, right, takes you into 350. After that, notice that there's pretty poor structure in here, maybe a bump in the road actually. Let's throw that on the chart. That's worth noting here at the 355, but really some room to run into about 367, okay? And I'm not calling for this to happen all in 1 week, but if the chart starts to develop into some sort of bullish pattern, that is ultimately what I could see unfolding over the course of the next couple months. However long that structure takes to put into place, those are the numbers I would pay attention to the upside here inside of Facebook. Obviously, the metaverse thing is coming up for December 1st. MVRS is going to be the ticker here. Next up, we'll move on over to NVIDIA. Huge move into the end of the week. And again, just like Tesla, this is something that I would have a hard time advocating for new longs up here, given the nature of this chart. So I really think the most appropriate thing to do would be to look at the 30-minute, just look at levels to pay attention to, not so much direction based on daily. You can certainly see that we have a clear area of support here. That's at 297.50. A breakdown takes us into here. The reason that level is on the chart is if we take out the fibs, come in from the low of the move here to the high of the move, you'll note that that's the 61.8. That is the line in the sand always whenever we're dealing with expansions of range. So to me, that's kind of the last-ditch effort of support. If we start to give that up, then I would look for the gap to ultimately fill down to 267.82, okay? And again, is it just a blind short? Do we expect that to happen regardless? Absolutely not. Going back over to the daily, the chart is just overwhelmingly bullish. A little bit of an inverted hammer from Friday's session, so maybe it cools off, but these are the levels I'll be paying attention to, right? Breakout happens up and over 312 to continue to take us into blue sky territories. That's really going to wrap it up in NVIDIA. Next up, we have Microsoft, and Microsoft is kind of chugging higher. This is kind of my expectation for what the S&P might do. Really, just more of that grindy nature. So again, still moving higher, but more grindy instead of just breakaway and clean value to the upside. Hopefully that's a useful comparison. In terms of levels to watch out for, again, it's very hard to advocate for a swing long up here. There's really no pattern, clearly just in a strong uptrend. But the level I would pay attention to on any further pullbacks or consolidation is right here at 330. Again, looking at a 30-minute chart, you can see that's where we get our most price interaction from. So touches, a little bit of a touch in there, but really most importantly this, as well as the pullback from, I believe that was the Thursday morning, yes. So that's what I'm watching. 330.66 on any pullbacks, looking for a potential bounce out of it. Anything underneath, support trend lines in play, as well as 326, the whole dollar. Let's go to the daily just to talk about that. So that would look something like this, looking for that to bounce and resolve to the upside, given the nature of the uptrend that we're in essentially. Let's continue on to Amazon, and this one is starting to reveal its hand a little bit, at least, in a stronger move back up above this area of resistance. Remember that in the past we were essentially saying it's stuck in the midpoint of this range right around in here. Obviously it's resolved that to the upside. We even started to fill some of the gap that was remaining overhead. So looking for further bullish continuation, obviously on 3 days, 3 extreme days to the upside, I would start to be maybe looking for more of a consolidation price acceptance up here as opposed to just blind follow through to the upside. And also noting that Jeff Bezos, just like Elon Musk, is starting to unload some shares, okay? They might have different reasonings. However, if this is any sort of indication of what Tesla might do, which, maybe it is, maybe it isn't, just something to be aware of, okay? So healthy consolidation happens as long as we hold on to 3,500. Filling of the gap obviously takes us to 3,580. Anything above that, that's where there's really more room to run up towards 3,700. Noting that this in here was where that big breakdown happened from. I imagine that next high would be in play before those all-time highs. As the chart sits, bullish, but waiting for some sort of structural either pattern consolidation to be put in, or, technically a break of 3,500 would take us into the breakout point here, those big areas of resistance at 3,453. Would I short Amazon right here? Probably not, but just being aware of that, if we break down under 3,500, that is the target, the prior breakout point at the 3,453. Hopefully we hit that home. Quick reminder to hit the thumbs up button, subscribe to the channel, all that good stuff YouTube tells us to promote to you guys. Regardless, getting into the trade ideas, first one is going to be on AAL for American Airlines. What you'll notice is where I'm hovering my cursor, we have a perfect pressure cooker top. Now note that we did gap up on Friday, largely due to the Pfizer news, of course, opening up, the reopening sort of play, if you will. And that put us right at this known area of resistance. So if we want to hang tight up here and not fill that gap underneath, looking for the breakout up and over 2214 to take us, if we look left, very emotional breakdown, right? There's really no structure in here that strikes me as obvious other than about 2375, and then after that, this high in here at 26. And again, I'm not advocating that this happens all over the course of a day or a week, but over time, those are the numbers to pay attention to. So again, just to recap, further consolidation, break puts into play higher, not interested if we want to fill the gap and potentially trickle lower after that. Next up, we'll take a look at M for Macy's, and earnings are around the corner on this one, but with the holiday season coming up, right? And looking at the structure of this chart, you can clearly see we are in a nice uptrend, making clear higher highs and higher lows, starting to put in a pressure cooker top, even if it wants to pull back. If we respect 2843, starting to look for hammer candles that print, indecision doji candles that print, things that make us question, right? Is this pullback ending? Can we flip long over the highs and then retest here? That's the first area of interest. Or if it wants to hang high and tight, put in consolidation that looks like this, breakout up and over 3169 puts into play. If we scrunch up the chart, there's going to be really no overhead target. I'm going to have to grab way more time. Let's go to like a 3-year monthly just to see what we have. Obviously, largely due to what was happening a couple of years ago now, right? The sickness sell-off. Let's go ahead and try this, and we'll go ahead and grab 10 or 15 years, I guess. That's just what we happen to click. So upside targets, right? On a break of 32, just about take us into, I would argue that's the number to pay attention to. 35, nice round number here inside of Macy's as the upside target. Let's go back down to a reasonable time frame. Not interested in the trade if we break down underneath 2843, or even if we break down underneath the support trend line, right? That would be a secondary buy point, but it would be ideal if we respected the prior set of highs. Let's get on over to charge point now, which is the next trade idea. Coming in and looking at this, what you'll hopefully notice is that we have a bit of a bull flag consolidation starting to form. So if we want to break out up and over the top end of this range, the range being defined as this prior zone right here, break of 2621 puts into play the resistance trend line. Over that, we have 2934 coming in from here and looking left continually, right? again, poor structure, just like what we saw in AAL. So the real, opening of the door, essentially, in my estimation, this could kick things off. But once we start clearing some of these levels, this is the meat on the bone, in my estimation, from 29.34 up to about 33.63, and potentially the pivot high after that at 35.50, right? So keeping charge point on the list, I'm not necessarily sure that this happens soon per se, but it's just something to keep in mind, especially as the EV sector really is starting to heat up, okay? Next up, we have this BSIG, and this is not a stock that's typically on my radar. Usually it trades much lower volume. Take a look at this number in this box right here. If I do something like hover the cursor, you can see we're only in, hundreds of thousands. And as of late, after this past earnings announcement, that's when it really picked up in terms of volume, and we're trading millions of shares, okay? So that, paired with the fact that we have a bull flag in play here, looking for a breakout up and over 30.61 into blue sky territories, want to see it hold on to the low end of the flag as support, 29.53. If it does break down, and this coincides for a super support prior breakout point here, and support trendline 50 SMA all at the same place, 27.70-ish, we'll call it for round number's sake, maybe willing to take a stab at a pullback buy at that point in time. If we start printing hammer candles, if we start printing indecision doji candles, you know the drill, things that make you question, is the pullback ending here? Can we flip long over the highs and then get back up into those overhead targets? Next and lastly, we have AFL for AFLAC. Again, thank you to the Discord for pointing this one out. Clearly, pressure cooker top. I mean, look at this. All the interactions here coming off of a bit of a V-shaped recovery. However, note that we have low, higher low, higher low, higher low, technically higher low off the 50 SMA. If we want to pull back, another higher low would be A-okay. Retest of 57.58. I would expect a break after all of these touches that we've put in. So looking bullish here inside of AFLAC, scrunching up the chart. There's really not a whole lot of data to look at overhead, unless I might be mistaken, right? Let's do the same thing we did for Macy's and kind of grab some more years to look at here. And no, absolutely not. This would kind of coincide with a break of the all-time highs. We're technically trading right at and around them, so blue sky territories would be in play. Probably looking at 60, nice psychological number overhead. 65 would be the next major psychological one. On the way there, looking at whole and half dollars, intraday levels that do form to act as resistance areas. So that's really going to wrap up the video. If you enjoyed it today or learned anything new, notably with that market profile section, let me know in the comment section down below, or by simply giving the video a thumbs up. Don't forget that our secondary channel is linked down below in the description. We do about 10 to 12 videos there a day on different stocks, usually the ones the underbelly of the market, if you will. So check that out if you're interested. And all of that being said, I wish you a green trading week.